What's up, everyone? Welcome back to Earn It, Save and Invest It. Today I'm going to give you an update on my $100,000 challenge, as well as just an overall update on the stock market in general over the last week and what to expect over this next week. So just so we can get into it quickly, give me a like and subscribe. I really appreciate it. And let's go. $100,000 challenge, week 39. I am at around $7,800. That's not my ideal, and I'm going to go over my goals. This is my portfolio right now. I have TQQQ, Celsius, Meta, Hims, Amazon, Nike, Adobe, The Trade Desk, Fubo, Hesai, Salesforce, and Oddity. I do have a couple new ones in here, as you can see, actually just one, and I added some more. So I'm at $150 cash right here, but I put $50 every week, so that will be $200 immediately tomorrow, or no, 2 days. It's Saturday still. These are the transactions I did. So I did buy some Oddity at $13 because I'm going to start averaging down. Oddity went down. If you didn't see, Oddity is down 63%. Now, Oddity is not a company that most people know. It's a beauty product. They do makeup. They announced that something really bad happened in their advertising algorithm with their biggest partner. And so things got all messed up, and they're expecting bad numbers over the first half of this year. So it just cratered, as well as Hims has been going down just so much, right? So those have not helped. Celsius doing very well though. I like that. Salesforce is actually up 5% for the week, but my position is down 2%. So that's fine. So again, though, I did buy my initial into Salesforce. I bought $100 worth. It was at $199, and so I bought basically half a share. Oddity, I bought two. I tried to average down a little bit. Adobe, I also bought $50 worth. The Trade Desk, I bought about $50 worth, and then Hims, I actually bought $70 worth in the 14s. Right, I'm going to start adding onto my Hims and Hers position. Because I do believe they're going to get out of the lawsuit and have incredible growth for the future. So, but I'm not going to just dump a bunch of money. I've already had my money locked into it. I'm in, but I will start adding to it. My goal is to have 100 shares. I'm only at 60. I know 100 shares isn't a lot, but because of my portfolio, I don't want it to take up too much of my portfolio. Week 39, my goal was to be at about 10,500, but again, this is like, I'm never losing money, right? If this goal were to happen, every single week it goes up. This is compounded 20% every year. So basically, right now I'm at 7,800, and it's actually, I think, compounding a little bit more than, I think I put it at 22%. So it's it's definitely higher than, my goal here. It's making me feel like I'm down. I mean, I started this goal at $7,354, and this was 39 weeks ago. Hims crushed my portfolio. I'm 25% away from this goal, but I'm minus 24% if you take away the $50 deposits, right? I'm only up 6% basically because of since June 2nd, I'm up 6%, but it's only because I've been depositing. I would have a lot less money if I didn't make deposits, right? From cash and then putting those into investments. So now I have bought, when I'm putting my cash into these stocks, I'm trying to buy at good prices, right? I'm buying these stocks that have kind of crashed. So that's what I'm doing. So even though right now those the $50 deposits haven't appreciated too much, they still will start accumulating over time. They will start appreciating. The AAII Sentiment Investor Survey, right? So again, we're starting to reel back on the bullishness. As you can see, it's been now 4 straight weeks of going back. The bears have kind of bounced a little bit, but right now we're at a 4-week high. So, again, people are calling it a SAASPOCOLYPSE kind of right now with the software space. Everyone's going down, right? How would you describe the earnings guidance for the year of 2026 after everyone's been given their fourth quarter of 2025, and most people are saying it's what they expected? Right now we're in a fear market in terms of emotional, but we're kind of near this neutral. I think this is where we're going to stay for a little bit. I think we're going to just kind of tinker with the fear spot for a little while. If you look at market momentum, I mean, it doesn't really look like that's extreme fear, but maybe it's just because we are not being able to push up, right? It's been a little while. But I mean, we almost reached this here in like November, and then we kind of went down, up, right? But it's still trending up. It's still trending up. So again, extreme fear, stock market's just emotional. I don't know what to say. And then it also says the stock price strength of how strong the prices are, though, right? It's extreme greed. So it's just really weird on how they try to do this. But then you have the put and call options, which is extreme fear, right? So right now you can see we're just kind of all over the place, right? Put and call options is like the ratio of how many, puts to calls there are, right? So there's obviously less calls being done and more puts, so that's why it's like a little bit of extreme fear. Or we're still at more calls, right? If you're over one, then you have more puts than calls. But right now, it's still higher than what we're used to, right? At least for a while. This is the S&P 500 over the last week. It's doing okay. Technology services is actually doing okay. Finance and even some of the tech, right? But if you look at the year, right? This is over the year. Tech services are just getting slammed, right? It is just Red Dead Redemption, right? And then we have electronic technology, and then over here we have some green, right? We have a lot of green. We have the minerals, transportation, utilities, all the smaller companies, right? Because this is all the squares are based on market cap. So as you can see, all these little companies over here with the energy and all that stuff, they're the ones that have really started to get green, where the big companies over here, then the technology and the services companies, they have not been doing well. So over this last week, there was an inflation shocker. So the U.S. markets tumbled on Friday because the January PPI rose 0.8%, far exceeding analyst expectations. So there was a little bit of Friday. It was a red day. AI disruption sell-off. The panic rotation away from software and service has intensified as investors worried about AI's impact on job markets. I'm going to kind of go over exactly that. Block, formerly known Square, became the face of this trend, surging over 13% after announcing it would lay off almost half, I think it was 40% of its workforce, so it can lean into AI efficiency. That's pretty crazy. So people are like, wow, what does that mean for other companies and stuff? Yeah, that's going to be AI efficiency. What does that mean for people, right? The tariff turmoil, the Supreme Court struck down that President Trump's tariffs. They struck it down that it was illegal in a 6-3 decision. In an immediate response, the administration moved to impose a new 10 to 15% global tariff under different legal authority. So it's just more tariff turmoil. And then we had the mixed tech earnings. Despite NVIDIA reporting strong fourth quarter results, its stock struggled to hold the gains because it weighed in on the broader sector, right? Conversely, Dell shares soared 20% on an earnings beat and optimistic AI server guidance. Streaming shakeup, Netflix shares jumped 10% after the company abandoned its bid for Warner Brothers, and I think that was a great decision. This paved the way for Paramount to move forward with a revised offer, so whatever, do it. Geopolitical tensions, oil prices climbed nearly 6%, with WTI crude crossing 66 per barrel. So amid escalating tensions and limited military strike involving US and Iran. So that's kind of been, on the stock market. Now, this has been some of the big, these are the earnings, right? Number one, we have the NVIDIA. So they reported a great fourth quarter, right? If you look at their numbers, you'd be like, I love it. This stock has got to be jumping up, right? The revenue reached $68 billion, nearly doubling from a year ago, with data center alone revenue reaching $62 billion. The disconnect, though, investors are increasingly worried that the massive AI capital spending by tech giants is unsustainable and may eventually be scaled back, leading to sell the news reaction despite the beats, right? So people, they've been buying NVIDIA knowing how the world's going to be with their NVIDIA chips and everything, but now people are like, well, what's going to happen in a few years? And now they're just kind of staying away from the stock. Number two, a major theme, so this was Square, right? A major theme this week was companies aggressively cutting staff to pivot toward AI automated operations. Block, again, took out half of its workforce. Again, tariff, all that stuff, right? Home Depot and Lowe's executives noted that consumer uncertainty regarding the new tariffs is going to impact them. So, and then again, the tech heavy volatility. I kind of went through all that, right? So Nvidia, the CEO, as you know, everyone knows him, Jensen, says artificial intelligence boom is just getting started. AI is going to be everywhere. The number of trade skill labor jobs that we're creating around the United States is really quite extraordinary. I'm delighted to see it, and that's a whole segment of our economy and a whole of our society that we would really love to have built back in the United States so that we could become a reindustrialized country again. AI is just going to be everywhere, so we have plenty of runway, lots and lots of growth ahead of us. It will take time, but we have lots of time. I think this is where, at the beginning of probably about a decade of build-out, people think that it looks a lot like capacity being built, but in fact, it's a very small amount of the total capacity the world needs. The amount of computation we need is far greater than the amount of capacity we're putting online this year and next year. And I do believe that. The amount that we're going to need with technology and things being connected and all that's going to be astronomically huge, right? But people aren't buying that anymore, right? They don't want to. Another big thing that happened, Amazon leads record 110 billion OpenAI funding, right? So they invested a bunch into OpenAI. It includes a $50 billion investment into the ChatGPT maker and positions AWS to compete more effectively in AI computing. So they invested a lot into OpenAI, and so that's just that was a big story. Also, right here, in recent months, software titans including Salesforce, Mark Benioff, and CrowdStrike, George Kurtz, have taken pains to reassure jittery investors. Recent AI breakthroughs have made it possible for software engineers to be much as 10 times as productive as they have in the past. It's never been easier to build website and apps, complete of host tasks, even for non-technical people. But a website that helps companies manage customer relations is a far cry from what many software companies offer. So, people are just kind of freaking out over this. Salesforce stock falls, right? As you saw, it did fall. Even though it was up 5% over the week, it did fall on the earnings. And then they're announcing a $50 billion stock buyback. So they believe in it. Another thing, this I think is the last news that I have to go over. February 27th, President Trump ordered all federal agencies to immediately cease using technology from Anthropic. So, the Department of Defense demanded that Anthropic remove red lines and safeguards that restricted the military's use of its AI. The government insisted on access for all lawful use cases without private company limitations. And so they said no. Note, we consider the technology that can be used for mass domestic surveillance or in full autonomous lethal weapons. They're like, no, we're not doing that. And so Trump says, all right, fine. You're on the radical left and woke and stating that the company would not dictate how our great military fights and wins wars. So that's just what happens. That's just kind of crazy. I understand we're going to need AI into our military and all. It's just so tricky and it's so weird to threaten that kind of stuff. But so now he's done a government-wide ban. All federal agencies must stop using their products. They're trying to designate them as a supply chain risk to national security, which is typically reserved for foreign adversaries like China or Russia. And then Trump threatened the company with major and civil criminal consequences if they were not helpful. So that's just that, right? OpenAI deal. Shortly after the ban, OpenAI announced that it's doing a deal with the Pentagon. And again, their stance is just they're going to challenge it in court. And so that's just that, right? We're going to go over the earnings. What happened over this last week, right? Nvidia, they beat EPS is 162 versus 154, and a revenue of 68 billion versus 66 billion, right? But the performance of the actual stock is down. The shares initially fell despite the beat, as investors feel scrutinized by the durability of AI data center demand. So they just don't think it's going to be able to stick. Salesforce beat, reported EPS of 381 versus 305, revenue of 11.2 billion versus 11.19. So they barely beat on that. Performance is down. Again, it went down after hours due to fiscal 2027 revenue guidance that was slightly below analyst estimates. Snowflake beat, EPS 32 versus 27 expected, revenue 1.28 billion versus 1.25 billion, performance up. Shares were supported. These shares were up, supported by strong AI adoption metrics and a $400 million contract. Workday was a beat, $2.47 versus $2.32, and a revenue of $2.53 billion versus $2.52. Again, they're also down 8%. Again, it's a service stock. Trade Desk, they beat it 59 cents versus 57. Revenue of 846 million versus 840. Again, down though, the shares fell, and because the guidance came in a little bit, it's showing a deceleration in growth, but I believe the company is going to be just fine. Home Depot, they beat 272 versus 253, and a revenue of 38.2 versus 38.01. The performance was kind of a mix, but slightly down. So, first tariffs and all that stuff. And then Domino's Pizza, I just threw that in there, right? We're doing a little bit of the consumer stuff, right? Results were mixed. EPS missed, revenue beat. EPS was 535 versus 538, but revenue beat was 1.54. So I don't know why Google did not give me the expected, but it was up about 5%. And yeah, and a 15% increase in the quarterly dividend. Oh, and then Celsius, that's right. They beat 0.26 versus 26 cents versus 19 cents, and then revenue of 721 million versus 638, and it's going to be so much better. I'm going to make another video on Celsius. It's amazing. Up 14%. The blowout performance and strong momentum of its Alani Nu brand. It's been doing amazing. Then Hims and Hers, of course. This is going to be the last one for sure. This is a big one for just all the videos and stuff that I've done. Beat, they reported 8 cents EPS versus 5 cents, and revenue of 617 million versus 619. So a little bit less on the revenue. I think that was kind of expected with all the GLP-1 and stuff. Performance is down 6. It's just down, right? Again, the compounded semaglutide, right? The GLP-1 stuff. So next week, what are we going to look ahead towards? It's a critical junction for the stock market, headlined by a pivotal jobs report, multiple manufacturing updates, right? So we do have the jobs report that's going to be coming out. So we got to keep an eye out on that. Manufacturing and services PMI data. So we're going to be checking out what that's going to be going on. The Federal Reserve Beige Book and speeches. So there's going to be no interest rate decision, but they still are going to be talking about things. So the stock market always is, listening to that. The top 10 stocks that are going to be reporting this week are going to be Broadcom, Costco, CrowdStrike, Target, Ross, Marvel, Sea Limited, Mongo, Best Buy, GitLab, also AutoZone, Norwegian Cruise Line, Abercrombie & Fitch, Okta, and then this is kind of a bigger full layout of a few that I'm definitely missing, right? Kroger, and did I say Costco? Yeah, GoPro maybe. And so yeah, that's the market update. That's what's going on. Please give a like and subscribe if you're still watching. I appreciate you. That's the kind of the update for my portfolio, what's going on in the stock market over the last week, what to expect over this week. We got a little bit of it's nothing crazy. Usually what happens in terms of what to look forward to is kind of the earnings a little bit, right? There's a couple of these announcements of certain data points, right, about the economy. But going back on the week is always interesting because there's always so much more news looking back because there's always the unexpected stuff. So that's always fun to look at. But anyway, thank you for watching. I really appreciate it. Please give a like and subscribe. Comment the stocks that you're watching, that you're buying or selling. I really appreciate it. I always tell people to Be prepared, be aware, and be prepared, so you're never scared of the stock market, because it's all about feelings. And so when the dip happens, you're not afraid. Don't trip by the dip. Thank you for watching again, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.